Hey traders! Welcome to our 30-day journey towards becoming a successful trader. Whether you're a beginner or looking to level up your trading game, this comprehensive guide is designed to equip you with the skills, knowledge, and mindset needed to navigate the exciting world of trading. Day 1. Understanding the basics of trading. 1. Introduction to different financial markets, stocks, Forex, cryptocurrencies, etc. 2. Explanation of trading versus investing. 3. Introduction to key trading terminology. Day 5. Building a strong foundation. Of course, building a strong foundation in trading is essential because it forms the basis upon which all your trading decisions and strategies will be built. This phase of the course is designed to provide you with a solid understanding of crucial concepts and practices that will help you navigate the markets with confidence and competence. Day 2. The importance of risk management. Risk management is the cornerstone of successful trading. You'll learn how to protect your capital and prevent significant losses. Topics covered include 1. Risk-reward ratio. Understanding how to assess potential gains against potential losses for each trade. 2. Position sizing. Determining the appropriate amount of capital to allocate to each trade based on your risk tolerance and the trade setup. 3. Leverage. Exploring the pros and cons of leveraging your trades and understanding how to use it responsibly. Day 3. Crafting your trading plan. A well-defined trading plan is your roadmap to success. You'll create a plan that outlines your goals, risk tolerance, strategies, and rules. Key elements include 1. Goal setting. Defining your short-term and long-term trading goals. 2. Market selection. Choosing the markets and instruments you'll trade. 3. Entry and exit rules. Establishing clear criteria for entering and exiting trades. 4. Timeframes. Deciding on the trading timeframes that align with your strategy and lifestyle. Day 4. Introduction to technical analysis. Technical analysis involves studying price charts and patterns to make informed trading decisions. You'll gain a foundational understanding of 1. Candlestick patterns. Learning to interpret candlestick formations to identify potential trends and reversals. 2. Trend lines. Drawing trend lines to identify trends and areas of potential support and resistance. 3. Support and resistance. Understanding how to spot key levels where prices tend to stall or reverse. Day 5. Exploring trading styles. Different trading styles suit different personalities and goals. You'll explore various trading styles and discover which one resonates with you. 1. Scalping. Quick, short-term trades aiming to capture small price movements. 2. Day trading. Opening and closing positions within the same trading day. 3. Swing trading. Holding positions for a few days to several weeks, capitalizing on medium-term price trends. 4. Position trading. Holding positions for weeks to months, focusing on long-term trends. By the end of this phase, you'll have a strong grasp of risk management principles, a personalized trading plan, an introduction to technical analysis, and a better understanding of trading styles. Remember, these foundations will serve as the building blocks for the more advanced techniques and strategies you'll learn in the following days. Stay committed, practice what you've learned, and get ready to dive deeper into the world of trading. Day 6-10. Technical Analysis Deep Dive. Technical Analysis Deep Dive to provide you with a more comprehensive understanding of this crucial aspect of trading. Day 6. Candlestick Patterns and Chart Analysis. Candlestick patterns are visual representations of price movements and offer insights into market sentiment. You'll learn about basic candlestick patterns, grasping common patterns like doji, hammer, engulfing, and more. Pattern recognition. Identifying reversal and continuation patterns to anticipate market movements. Japanese candlestick interpretation. Understanding the psychology behind candlestick formations. Day 7. Trend identification and drawing trend lines. Trends are the cornerstone of technical analysis. You'll explore how to identify trends, recognizing uptrends, downtrends, and sideways movements. Drawing trend lines. Creating trend lines to connect successive highs or lows, providing key support and resistance levels. Channel patterns. Learning about price channels and how they aid in trend analysis. Day 8. Support and resistance analysis. Support and resistance levels are critical for determining potential entry and exit points. Topics include horizontal support and resistance, identifying price levels where buying or selling pressure tends to halt. Dynamic support and resistance, understanding moving averages and trend lines as dynamic support, resistance. Role reversal, how old resistance levels can become new support, and vice versa. Day 9. Effective use of technical indicators. Technical indicators are tools that help confirm trends and make informed decisions. You'll cover moving averages, understanding different types of moving averages and their applications in trend analysis. Relative Strength Index, RSI, gauging overbought and oversold conditions in the market. Moving Average Convergence Divergence, MACD, analyzing momentum and potential trend reversals. Bollinger Bands, utilizing volatility indicators to identify potential price breakouts. Day 10. Chart patterns and advanced analysis. Chart patterns offer insights into potential market movements. You'll delve into continuation patterns, understanding flag patterns, pennants, and triangles. Reversal patterns, exploring head and shoulders, double tops, bottoms, and more. Fibonacci retracements, using Fibonacci levels to identify potential support and resistance zones. By the end of this phase, you'll have a comprehensive understanding of candlestick patterns, trend analysis, support and resistance levels, technical indicators, and advanced chart patterns. These skills will empower you to analyze price movements more effectively and make informed trading decisions. Remember, technical analysis is a skill that improves with practice and experience. As you progress through the course, you'll be able to integrate these techniques into your trading strategy and adapt them to various market conditions. Day 11-15. Fundamental Analysis in Depth. Let's dive deeper into the realm of fundamental analysis and explore its intricacies. Day 11. Understanding economic indicators. Economic indicators provide insights into a country's economic health and can influence market movements. You'll learn about gross domestic product, GDP, understanding the total economic output of a country and its significance. Unemployment rate, analyzing the job market's health and its impact on consumer spending. Consumer Price Index, CPI, grasping inflation levels and their implications for interest rates and currency values. Interest rates, exploring central bank decisions and their impact on the economy. Day 12. Analyzing company financials for stock trading. For stock traders, understanding a company's financials is crucial. Topics covered include income statement, analyzing revenue, expenses, and profitability. Mindset, develop a disciplined and patient mindset. Emotions like fear and greed can cloud your judgment and lead to impulsive decisions. Risk psychology, accept that losses are part of trading. Avoid revenge trading after a loss, and stick to your risk management rules. Trading journal. Keep a trading journal to document your trades, emotions, and thoughts. This helps identify patterns and areas for improvement. Day 20. Simulated trading and continuous learning. Simulated trading. Practice your strategy in a simulated trading environment, paper trading, before committing real capital. This helps you gain confidence and refine your approach. Adaptability. Markets evolve, and your strategy should too. Stay open to learning and adjusting your strategy based on changing market conditions. Education and networking. Continue learning through courses, books, webinars, and networking with fellow traders. Staying informed is crucial in the dynamic world of trading. By the end of this phase, you'll have a thoroughly tested and refined trading strategy that aligns with your trading goals, risk tolerance, and preferred trading style. Remember that no strategy is foolproof, and losses are a natural part of trading. Sticking to your plan, managing emotions, and continuously adapting are key to long-term success. Keep in mind that trading involves substantial risk and should be approached with caution, proper education, and risk management. Top of form. Day 21-25. Risk management strategies. Determining position size and leverage. The 1% rule and other risk management techniques. Diversification across markets and assets. Setting stop loss and take profit levels. Day 26-30. Putting it all together. 1. Simulated trading practice. 2.
Learning from losses and adapting your strategy.
3. Continuous education and staying updated. 4.
Networking and joining trading communities. Congratulations!
You've completed our 30-day guide to becoming a successful trader. Remember, trading is a journey, and success doesn't happen overnight. By understanding the fundamentals, mastering analysis techniques, managing risks, and cultivating the right mindset, you're well on your way to achieving your trading goals. Be patient, stay disciplined, and never stop learning. Keep practicing, refining your strategies, and adapting to market changes. If you found this course helpful, don't forget to like, share, and subscribe for more valuable content. Feel free to leave your questions and thoughts in the comments section below. Happy trading, and I'll see you in the next video.